You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 22nd day of June, 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts each and every day. The first live broadcast is for members only and for those who are taking our 1-week free trial. A little later in the show, Michael will show you exactly how to take the free trial. There's no credit card required. That broadcast runs from 9:30 a.m. to 11:30 a.m. Eastern. Then after a 30-minute break, we come back and do the afternoon broadcast, which is open to the public. Anybody, everywhere. Now there's 2 ways to join the afternoon broadcast. The best way to join is to go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. The way it works is once you complete that 30-second registration, every trading day, right before this broadcast starts, you'll get an email. In the email, there will be a link. All you have to do is click the link in the email, and it automatically logs you in to our go-to platform. Now, why is that the best way to join the show, whether you're a member or not? So that you have access to the question box, so that you can actually ask questions and participate in the discussion. Now, of course, there will be days you're out of the office, away from your desktop, maybe on vacation this time of year. All you need is an internet-connected device. Cell phone, laptop, iPad. Point the browser to youtube.com/CFRN. Easy to remember, youtube.com/CFRN. Not only do we broadcast live each and every day on our YouTube channel, we also archive each and every daily show. Currently, there are over 2,000 daily live broadcasts archived for your educational and viewing pleasure. So with that out of the way, let's open with a word of prayer. And we'll talk a little bit about God's grace and His mercy. Hebrews 4:15 through 16 says, "For we do not have a high priest who is unable to empathize with our weaknesses, but we have one who has been tempted in every way, just as we are, yet He did not sin. Let us then approach God's throne of grace with confidence, so that we may receive mercy and find grace to help us in our time of need." Now, overall, I was a pretty good kid growing up. If my parents were still around, they would attest to that. But on the occasions where I found myself in the wrong, whether on accident or not, my first instinct was to try and hide, sort of the way Adam and Eve did in the garden. Have you ever had your parents, when you were a child, ask you, hey, who did this? Maybe a can of red paint got spilled all over. And you stood there with red hands and said, wasn't me. I didn't do it. Well, you knew better, and of course your parents knew better as well. What happens in this type of situation, whether we're children or adults, our shame overtakes us and causes us to hide from our problems rather than confess and be made free of them. Desperately trying to cover up and refusing to admit to it only makes the shame and the situation itself so much worse. Now, we may blame Adam and Eve for disobeying God and allowing sin to enter the world, but I don't think any of us blame them for hiding from Him afterward, because we ourselves have most likely done the same. They knew what they had done, and they knew that God knew, but their shame forced them to hide from Him. We've all felt that awful feeling of shame, knowing what's done is done, and we cannot take it back, no matter how remorseful we may be. We see our weakness as just that, weakness. And we hate to admit it when we give in to them. And that day in the garden, when God called out, Adam, where are you? Well, obviously He's God, and He knew where Adam was, hiding. It wasn't a geographical question. It was actually a spiritual question. Hebrews 15 tells us that Christ empathizes with our weaknesses. He gets it. He walked through the same temptations that we face, but our hope is found in this. He did not sin. And this was not done so that He could sit back and say, shame on you. If I can do it, anyone can. No, in fact, He lived the perfect life so that His mercy and grace could be freely extended to us when we fail. It is our job, then, to approach God's throne with confidence. This isn't always easy when we're natural hiders, but God assures us that in our time of need, He is more than ready to help us. So I encourage you today, boldly embrace God's grace and mercy. Humbly accept His help. Rest in His empathy. He loves us and truly desires for us to let go of shame and live in His presence. Let's pray. Heavenly Father, thank You for the grace and the mercy that You extend to us. Our sinful nature tells us to sit in our shame and hide from Your light, but You came to this earth and lived the perfect life so that we no longer need to be shackled by our sins. True freedom is found when we lay down our pride and bring our weaknesses to You. Thank You for walking through this sinful world. You understand how we are tempted because You were tempted as well, yet never sinned. Your empathy allows us to bring every worry, every fear, and every fault to Your feet because we know You understand. Help us to approach Your throne with confidence because it is a throne of mercy. When we try to hide our sin and shame, remind us of Your boundless grace. I pray that we would draw nearer to You no matter what we're going through. Your word promises that You will give us gracious help in our time of need. Help us believe that with all of our mind, body, and soul. In Jesus' name we pray. Amen.
Amen.
Everybody said amen. All right, guys, let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Let me pull in fresh data one more time. There we go. All right, here's the story. The Dow is down 58 points. NASDAQ is down 10. S&P 500 is down 5. And the Russell 2000 is down almost 6. So no movers, no shakers. In the commodity basket, crude oil is down $3.11, trading 106.47 last. That's a drop of 2 3/4%. Gold is up $2.30, trading 18.40.90 last. Silver down 29 cents, trading 21.47 last. That's a drop of a little over 1 1/4%. In the Asian markets, at the close, Nikkei posted a loss of 96 points. The Shanghai fell 39 points, which is 1 1/4% for the Shanghai. The Hang Seng dropped 551 points, which is 2.5%. In the European markets, the FTSE closed down 62 points on the day, almost 1%. The DAX fell 148 points, a little over 1%. And the CAC fell 48 points, almost 1%. So, that gives us a red day in Asia, a red day in the UK, and so far, it is a red radio Wednesday here in the US of A. So with that, we'll go to Michael and get a recap of everything that happened this morning in the live training room. After that, I'll come back. We'll take a look at the Logic 247 alerts, the concierge trade alerts, and at any point during the broadcast, if you have a question, all you got to do is just type it into the question box. Michael, I can see your charts, so
Okay.
It's officially all yours. Take it away.
All right, here we go. Give me just 1 second. I gotta get that other chart back up. I'm gonna fix this. That is what it's showing. This is what I'm trying to find. Okay. All right. There. So we've got that. And now put that and go to this. Here we go. I'm ready now, Dwayne. All right. Good afternoon, everyone. Today is Wednesday, the 22nd of June. If you've not taken a free trial with us and you want to take a free trial with us, go here to eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us biggest training challenge so we can tailor one-on-one training just for you. Hit the send button to be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know you took the free trial. All right, results. Here we go. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 22nd day, June 2022. Today I made 79 ticks in crude, 45 ticks in gold, and 26 ticks on the ES. That put us at 1565 on the morning session. Today it took 12 minutes and 3 trades to get to the goal for the day. At that point, we were up $100 a contract, and we took a total of 23 trades this morning. On the month now, that puts us at $16,842 a contract. That's over 15 trading days, averaging $1,122 per contract per 2-hour trading day. We've now gone 179 days since our last negative day, and we've gotten our goal for the day on 118 days so far this year. That puts us at $128,941 per contract on the year, averaging $1,092 per contract per 2-hour trading day. Where are we on the month? 11/22, 1,092. Pretty good. Now, if you had a goal of $100 per contract per day, and you were to quit trading when you got that goal, and you added 1 contract per month, doing everything exactly as I did in the morning, so far this year, you would have only had to work 17.3 hours on the year, and you would have averaged $3,204 per hour. Okay, $3,204 an hour. Pretty good money. All right. So if you could do $3,204 an hour for 40 hours a week, that would be about $6.4 million a year. Just doing math in my head. If you were to do it for 40 hours a week, but you don't have to. Now, let's see. Here we go. On gold. All right, it looks like right in here, we started out with gold. We didn't trade gold for a little bit. Our first trade on gold, there were a couple of things it looks like that set up in here, but the first 5 or 10 minutes were kind of messy this morning because we had some FOMC guys speaking. Some Fed guys speaking. Looks like our first trade was a break even right here, then another break even right there, and then a 13 tick trade right there. And then we did nothing through here. It looks like there were a couple of trades in there, but I didn't do any of them. And our next trade, looks like we had a break even here and possibly another break even there on gold. We went from 13 to 28. So this was our moment in time where I thought it was going to go up and then go down, and it didn't go up at all. It just went straight down. That was today. Here's the 15 tick. That put us at 28. Then 2 ticks there put us at 30. And then there were a couple more trades in here somewhere. There was another trade where we got 13 ticks to put us at 43, and then 2 more ticks to put us at 45. So I'm not sure where all that happened in here, but it all happened with gold. During the break, we'll go over just the highest probability trades, and there were none. No highest probability trades during the break in gold. Now, if you were just look at the 7 tick range stuff, we'll look at that really quick. Just the blue on blues and the red on reds where you can see all the colors, right? That's what the ribbon is all about. It's okay to trade when you can see all the colors. Now, we had no blue on blues or red on reds through here until right here. There was one right here. Now that would have stopped you out. I think I did stop out on that one this morning. Then it got into chop right here. You see how the lines are all converging. Getting into chop, you don't want to do anything. Wait till it gets out of chop. You're over here. Now you have second highest probability trades that you can do on this move down, but you don't want to do anything. You don't want to do anything until you get the right color BBC, the right color bar, where you can see all the lines. All right, so right here would have been a good short right here. Here's another one right here that would have been okay. All right, so both of those red, offer red. Now, what I was telling people is you can still do these bounces off the BBC if the BBC is the wrong color, or even if the bar is the wrong color, as long as the slingshot's right. But for these right here, you don't need the slingshot, okay? You don't need the slingshot for those. Right in here, the line started to converge. You don't want to take that one. And that was it for the 7 tick range. BBC bounces. Now, crude oil, we had quite a few trades in crude this morning. Go back to the very beginning. Okay, this is the 4 tick range right here. Okay, so we're going to run into a trade here pretty soon. Okay, we had a break even right there. Then it looks like we didn't trade crude again until, well, it looks like we didn't trade crude again until way over here. So we had a break even on the first trade, then we had a plus 15 on the second trade. We missed that third trade, fourth trade, fifth trade, missed all those. Had a break even on that trade. Then over here, we picked up 5 ticks to get us to 20. Then 4 ticks to get us to 24. Missed this trade off the BBC. Had a break even in there. Then 3 more ticks to get us to 27. Then 7 ticks to get us to 34. Then 11 ticks to get us to 45. Looks like a break even in there. And then this was our moment in time. I thought it was going to go down, then up, then down. It really didn't go down much. It just went up and then down. The slingshot, though, when it was over here, when the slingshot was over here, and all you could see was this little bit right here, I said I thought it was going to go up to this level and then go down and exceed this level. I thought the cycle was going to go down and hit this level. This is when all we had was this right here. Okay. So what it looked like was, well, what it looked like was this over here. And I said, I think the cycle is going to go down to this level, and the green line is going to go up to this level and then go down to that level in the slingshot. And so all the stuff in the slingshot worked out. In here, I thought it was going to go down first and then go up, but it just went up and then came all the way down. Either way, we didn't have a trade there until we didn't have a trade again. There were some nice trades all through here, but we didn't trade the crude again until way over here. We had, this was like a 30 tick trade or 35 tick trade. 34 tick trade right here. We went from 45 to 79 on this trade right here. And I believe that was it for the crude for the morning session. I did say I thought it was going to get up to this level. It got within a tick of it. And then it pulled back off of there and ended up going back through it. During the break, just the highest probability trade setups. Let's see. Looks like there was one right here, one right here. One right here, I think, right? Yeah, one right there. One right here. One right there. And that was it. All right, so if we go to the 7 tick range, take a look at what that did. Just the ribbon trades. Go all the way back here to the beginning. Okay, so we're just going to do red on red where you can see all the lines. There's one, all right, or blue on blue where you can see all the lines. There's a red on red. Right there, just about, not quite. Right here, it got all crunched up. Still nothing. They got crunched up in here. That one worked out okay, but it still got crunched up. So I'd be looking in here for blue on blue. We didn't really get it. You had the secondary trades though. If you drew the trend line, you had the separation in the slingshot, where everything stayed blue. Let's see. Now we're an hour in now, so we've had a few trades. Right here was blue on blue. You could see all the lines. That was okay to take right there. And that ran about 30 ticks. Right here, red on red. There, red on red. There, red on red. There, red on red. So there's a few of them right here. You could have taken one right here. Change directions, didn't give anything. Change directions, didn't give anything. Change directions. You could have taken this one right here for about 8 or 10 ticks. And you see how when the ribbons get crunched up, you don't want to trade in there, in here, any of that stuff. See that? That's, hang on, let me bring this over. Okay. Right here was a long. All right, now this is all during the break. This would have been okay to take, break even probably. This would have been okay to take for a good gain. Right here, could add a nice short. And that was it during the break. That's the 7 tick range. Okay, just doing the ribbon trades. Now the ES, this was a level I thought we were going to get down to a little while ago during our moment in time. That was here, the moment in time was up here. But let's go all the way back to the beginning on the ES. All right, so it started out right in here and things were jumping all over the place. You see all the lines, all the bars in between these minutes. Things are jumping all over the place because the Fed was speaking right at 9:30. We had a break even on that one. I believe this is where we got our goal. We got 8 ticks on that. Then the one after that, we picked up 12 ticks. Yeah, 12 ticks on this move. Then we stopped out, put us back down to 12. So right here, we're at 8. We picked up 12 to get us to 20, stopped out, back down to 12. Then I don't know if we got 2 there or 2 on the next one. It looks like we didn't trade in here for a few minutes. It might have been that first one that I got 2 ticks on, then a break even here, and then we picked up we went from 20 down to 12, then to 14, and then from 14 we went to 26. So there was another 12 tick trade to get to 26. I believe that was pretty much it. Yeah, this was our moment in time. On this one, I thought it was going to go up and then go down, but the green line was all the way up into the cycle here, and I thought it was going to give one last push because the numbers in the DOM were showing up here, up to 3,800. I thought it was going to go up to 3,800 and then give the big push down, but it just gave a big push down. This was the number I thought it was going to get down to, down here. That was back here. When it was up here, I thought it was going to get down to that number. And you can see it eventually did get down there. Bounced off of that number and went right back down to it. It looks like I didn't take any more trades here on the ES after that last one. I know I went to, on the ES, went from 8 to 20 to 14, to 12 to 14, then to 26. Yeah, I guess it is the last trade I took. All right, so just the highest probability trades during the break. Looks like there was one right here that would have worked out okay. And that was it. Now, if we look at the 7 tick range on the ES, let me see if I can find that thing. I'm gonna fix this. Yes, here it is. It's all the way over here. No, that's not the one I want. There's another ES. Here it is. Here's the ES with the 7 tick range. Okay, so I'll bump this up just to here so we can see just a little tiny bit of it. And we'll go back to the beginning. What time is it? 12:27. Okay. So Joe, I'll send you a link and we'll meet in 15 minutes. All right. So blue off of blue or red off of red when you can see all the lines. That's all I'm looking for. Here was blue off of blue. You can see all the lines right in there. That one ended up working out okay. Here was a follow-up right here, blue off of blue. You can see all the lines. That was good. Blue off of blue. You can see all the lines. Blue off of blue. See, right in here, it gets a little foggy, the red off of red in here, because the lines are getting all crunched up right there. So we probably want to leave that alone. Right over here is a nice red off of red. You can see all the lines. Spun around, gave a blue off of blue right in here. Blue off of blue right here. Okay, red off of red. And that was it. That's it. So just using the red off of red and the blue off of blue, there was quite a bit of opportunity in there today. Remember those trades, they're on a 7 tick range. So they're, a move from like this one right here, gave a down close right here of 84.50. The first spot where it stopped was right here at 80.50. So it's 4 points from here to here. That's a whole day's worth right there. 4 points. If you were to do the secondary trades, if the slingshot's right and the colors are right, and you draw your trend line, then the secondary trades just knock it out of the park. Here's another one right here. You had the separation down in the slingshot right here, 80 1/4. The next level down was right here, 75.75. So you get another 4 points right there. Between there and there, you have 8 points. Can't beat that, guys. Over here, this bounce off the BBC. Now your stop would have had to be a couple of ticks below the bar that got you into the trade, and that's what I expect. 2 or 3 ticks below there. So right here, you go up. It did pull all the way back to a couple of ticks below, but then it ran up. So if your entry point was right here at the top of this bar, let's say 86.75, that ran all the way up here to 95. So that was almost 10 points. And we'll say a good solid 8 points right there. This one over here, if your entry was right here, 82.75, we'll say 82.50. That dropped all the way down here before it pulled back. Dropped all the way down to 70.75. So was that 82.50? So 7.5 points. You only got to do that once a day. And again, if you do the follow-up trades where the bars are all the right color, you draw the trend line. The slingshot's right. Let's see. I don't know how much more I can do, guys, other than fully automating it for you. I know that's what you want. Anyway, let's get back here to the spreadsheet. All right. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 22nd day of June, 2022. Today we made 79 ticks in crude, 45 ticks in gold, and 26 ticks on the ES. That put us up to $1,565 a contract on the morning session. Today took 12 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract. We took a total of 23 trades this morning. That puts us at $16,842 on the month. It's over 15 trading days, averaging $1,122 per contract per 2-hour trading day. We've gone 179 days since our last negative day, and so far this year, we've gotten our goal in 118 out of 118 days. That puts us at $128,941. That's one contract, 2 hours per day, averaging $1,092 per contract per 2-hour trading day. If you were to quit trading when you got your goal for the day, and you were to add 1 contract per month, you would now have traded, and your goal was $100 a contract, and you did everything exactly like I did. Yeah, a lot of qualifiers there. You've only had to work 17.3 hours so far this year, and you would have averaged $3,204 per hour. Okay. If you've not taken a free trial and you want to, go here at eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial, so make sure you click on that confirmation link. Okay. Hang on, let me read that in a second here. That's on there. Okay. So, as boring as I would find it after getting the goal with my 10 contracts, would I be willing to switch to just the ES on a 7 range and trade only that for a while during the morning session? Yeah, at some point I'm gonna work my way to that, Jake. I don't know when. You know, it's not fair for me to do all that stuff with the ribbons and things like that on the 7-tick range in the room in the morning when I don't have it on NinjaTrader yet. Okay, so when I get it everywhere, then it'll be fair for me to bring that stuff up and start showing it. Could I clone myself and go to your office? Yeah, I'm not sure you want me in your office all day if you clone me. All right. So with that, I guess I can pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. There's one other thing really quick that I can show you. I don't know if I mentioned this, but if you were to use the slingshot and you were to use the BBC colors and you were to use the ribbon takes out a lot of the guesswork, okay? It takes out the MA1, it takes out the black step line, it takes out the need to look for a trend. It takes out a lot of the guesswork, right? The ambiguity, the things that people have the hardest time figuring out. So if you can see all the lines clearly and you get a bounce off the right color BBC and you have the slingshot in your favor, those trades are going to work out well more often than not. Okay. Just saying, yeah, it takes out the dynamic support and resistance too. Okay, guys, I'm making it as simple as I can for you. All right, with that one, I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Get away, and I can almost see your charts. And
Yeah,
Joe, I'll great and send you that link.
Great job today.
Thank you, sir.
Recap of the recap.
Today, it took 12 minutes and 3 trades to get to $100 a contract.
Good job.
Thank you. Thank you.
Okay, so that's what happened the first 2 hours of Wednesday, Wall Street Wednesday, from 9:30 a.m. to 11:30 a.m. Eastern. And now we'll look at the Logic 247 recap for the entire week so far. Of course, we had a holiday Monday, but we still put some alerts out Sunday night. We're in week 203 of Logic 247. Now, if you're new, Logic 247 is our around-the-clock, 24/7 E-mini alert service, which includes not only the E-minis, but crude, gold, silver, the euro, and now even bonds. Most people think of trading as something you do Monday through Friday from 9:30 a.m. to 4 p.m. Eastern. But those who trade futures know that the Globex markets open Sunday night at 6 p.m. Eastern. And that's when our alert channel opens and we start sending out alerts. Here's what's happened since the markets opened Sunday night at 6 p.m. Eastern up to 12 noon today Eastern. We issued a total of 39 alerts. 9 never triggered. Still waiting on the outcome of 3. So that's given us 27 actionable alerts, of which 4 or 15% would have been stopped out based on not risking more than $300 per contract, per trade, less when possible, using market structure in a very simple 3-step process that we teach all of our passport holders. Now, yesterday we were sitting at 27% stopped out. Over the course of the last 24 hours, that's dropped to 15%. What we've averaged over the last 203 weeks, 10,900 plus individual alerts. On average, 20% of the alerts do get stopped out each and every week. Okay? All right. So that's Logic 247. Now the Logic alerts are based on current price action. Our original alert service, the concierge trade alerts, those are based on historic price action. And when current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. This CTA report, this is a static report. It doesn't come out around the clock. It's posted shortly after the Globex Open, a little later than normal last night. And you'll notice there are 2 numbers for each market. Now you probably don't trade every market. If you want to take a screenshot, we're going to walk through each one of these markets. So if you want to grab a screenshot, it won't all fit in one screen, so you can screenshot that. You can screenshot that. Obviously, if you're a passport holder or on the free trial, you already have these numbers since 7:35 p.m. last night in either the Telegram channel or the free trial channel. Now, again, you probably don't trade all of these markets, so the markets that you do trade, best way to handle this report when it comes out, we use the ES as an example. Go to 3787 and draw a line in the sand. I'll show you what that looks like when we go to the charts. Draw another line in the sand at 3751. And then make note of where price is at this moment in time for whatever market it is that you do trade, or markets. Okay? From this point forward, If price starts trending up towards 37.87, that's bullish. So our strategy will look for opportunities to be long the market. If price starts trending down towards 37.51, that's bearish. And so our strategy will look for opportunities to be short the market. In either case, you'll use Logic 247, which is based on current price action, and everything you learn in the live training room every day to help you find your own opportunities to be long or short the market. Now, speaking of the live training room, it is designed as an interactive training session. So if you just sit there and watch Michael and listen to Michael, or watch Valerie and listen to Valerie, and you don't actually get involved in the process, it's going to take you a very long time to learn a very simple strategy. When I first started going to Mexico many years ago, when we built Mission La Gracia, I never took any formal Spanish classes. I just thought, you know, I'm going to be down here so much, just hanging around the people. I'll just learn it by osmosis. But just being around it, I'll learn it. Well, I can say hola, and bueno, and baño, and that's about the extent of it. What I'm trying to explain to you is, because people always ask, how long will it take me to learn the strategy? Well, that depends on you, okay? Number one, from day one, you should be trading along in the simulator with Michael or Valerie, whoever's trading. And then, because every trade they take, every move they make, they always tell you exactly what they're doing, what the rule is behind it. Yes, I can scroll down. I did that specifically for you earlier. But let me do it again. Okay, let me know when you've got it. Now, what I don't understand is why you don't already have these numbers. If you're a member or on a trial, and I think you're a member, you should have access to these. If you don't, then check with Valerie. I don't know, maybe you need to upgrade your membership or something. But anyway, I just want to make sure you got it. Okay? All right. So what's important in the morning in the live training room is that you get involved in the process. What does that mean? Number one, you're trading along in your simulator until you qualify to go live. And you're asking questions. Every time Michael or Valerie says something that you don't understand, just type it into the question box. That's what the question box is for. Get a dialogue going. Okay, you said this, but I'm not quite sure what that means. Can you re-explain that? Can you tell me what this is? Can you tell me why we do that? It is a classroom type environment with trades being put on and taken off live in real time. Okay? There's no better way to learn, but it's dependent upon you participating in the process. Okay? All right. So everybody's got their screenshot. So we'll take this down. And we'll run through a couple of headlines. The Supreme Court ruled yesterday that Maine can't exclude religious schools from a state program that provides tuition assistance for parents to send children to private schools. Chief Justice John Roberts who actually writes about, I think, 2/3 of the decisions. In fact, he writes, I think it's 2/3 of the court's 6-3 conservative majority said the state can't subsidize private schools but discriminate against those that are religious because that violates the free exercise clause of the First Amendment. That is discrimination against religion, Roberts wrote. In their dissent, the 3 liberal justices said this is the first time the court has approved using state funds meant to provide free public education for all to pay for religious education. The decision is the latest by the court's conservative majority, easing policies separating church and state. Officials from Arizona and Georgia testified yesterday before the House Select Committee. We all know this is basically political theater. It's regarding, of course, the January 6th Capitol attack. No mention was made of Stephen Colbert's illegal entry into the Capitol or his team. But then, why would they? Now, the discussion, the political theater yesterday, was about how then President Donald Trump and his allies pressured them to help overturn President Biden's 2020 electoral victory. That's the electoral victory where Joe Biden got 12 million more votes than Barack Obama. Republican National Committee Chair Ronna McDaniel said in pre-recorded testimony that Trump had called her and asked her to help in the effort and put conservative lawyer John Eastman on the phone to tell her it was important for the RNC to help the campaign gather contingent electors to replace legal ones. 4 state officials from Georgia and Arizona who rebuffed the Trump's team's pressure campaign testified in the panel's 4th day of public hearings that they received death threats after Trump's supporters accused them of fraud. Maybe they did, maybe they didn't. Don't believe there was any evidence submitted. It's basically he said, she said. Unlike what happened with Justice Kavanaugh last week, when a young man traveled to his house with a rifle with the full intention, a mentally ill young man, I would think, with the full intention of assassinating Supreme Court Justice Brett Kavanaugh. Now, there's evidence there because the young man, he actually called police on himself. He called 911 and told them who he was, where he was, and what he had come to do, and that he wanted to turn himself in. So thank God for that. A bipartisan group of senators on Tuesday released the text of their gun safety bill, saying it would make schools and communities safer. Our legislation will save lives and will not infringe on any law-abiding Americans' Second Amendment rights. Lead negotiators, this is bipartisan, Senator Chris Murphy, Democrat from Connecticut, John Cornyn, Republican from Texas, Kirsten Sinema, Democrat from here in Arizona, and Tom Tillis, Republican from North Carolina, said in a statement, the bill would encourage states to pass so-called red flag laws and close the boyfriend loophole by broadening restrictions on gun purchases by people who have abused romantic partners. Now, My wife and I used to run a shelter for battered women and abused children. It is a much larger problem than you can even begin to imagine. And so I support that part of it. Okay? The bill quickly cleared its first procedural in a 64 to 34 vote, putting it on track for a likely floor vote later this week. U.S. Attorney General Merrick Garland made a surprise visit to Ukraine yesterday to discuss and reaffirm the United States' commitment to helping Kyiv identify, apprehend, and prosecute individuals involved in war crimes and atrocities. He said, "I'm here to express the unwavering support of the United States for the people of Ukraine in the midst of the unprovoked and unjust Russian invasion." He met with his Ukrainian counterpart, the Prosecutor General, and announced the launch of a War Crimes Accountability Team to investigate any war crimes in Ukraine falling under U.S. jurisdiction. We keep sending people to Ukraine. I'm curious why we don't send someone to the Kremlin to talk to Vladimir Putin. I mean, how do you get rid of a snake? Well, you chop the head off, right? So I support the fact that U.S. Attorney General Garland did make his visit, reassure the Ukrainian people, but why not get to the source of the problem? See, if you can eliminate the source of the problem, then guess what? You don't have a problem. The director of the Texas Department of Public Safety, Colonel Stephen McCraw, told the Texas Senate Special Committee to protect all Texans on Tuesday that the law enforcement response to last month's mass shooting in Uvalde, Texas, was an abject failure. McCraw, now again, he's the director of the Texas Department of Public Safety. He slammed the Uvalde School District Police Chief, Pedro Pete Arredondo, for making the call to wait 73 minutes before confronting the attacker, who had closed himself inside adjoining classrooms where he sadly killed 19 children and 2 teachers. McCraw said there were enough armed officers with body armor to isolate, distract, and neutralize the shooter 3 minutes before he even entered the building. Now again, this is coming from the director of the Texas Department of Public Safety. I mean, he's owning this. I mean, he's not taking personal responsibility because he wasn't there, but he certainly is holding those accountable who were there and whose job it was to protect the children and the teachers. McCraw said the post-Columbine doctrine is clear and compelling and unambiguous. Stop the killing, stop the dying. The Supreme Court was very busy yesterday. They declined to hear an appeal of the $25 million verdict against the maker of Roundup weed killer for not warning about the cancer risks associated with its active ingredient, glyphosate. The decision lets stand the judgment in favor of Edmund Hardeman of California, who said he got cancer from years of using Roundup to kill poison oak and weeds. Bayer, the aspirin people, who they're into a whole lot more than aspirin these days. inherited responsibility for Roundup when it acquired Monsanto back in 2018. The German company has been appealing the verdict, hoping to block thousands of Roundup lawsuits similar to Hardeman's. Now, this isn't a class action lawsuit. This is one man who was awarded $25 million. But this opens the floodgates for everyone who may have been affected by Roundup to let their cases now go forward. The Environmental Protection Agency, the EPA, says glyphosate isn't likely to cause cancer in humans. First-time candidate Katie Britt trounced Representative Mo Brooks, Republican from Alabama, in Tuesday's Republican Senate primary runoff in Alabama. Former President Donald Trump at first endorsed Brooks, then withdrew his support of the right-wing stalwart ahead of the first round as voting sank in the polls. In the first round of voting, as he sank in the polls, Trump wound up endorsing Britt, a former chief of staff to the retiring Senator Richard Shelby, Republican from Alabama. If she wins, as expected, Britt, 40, will be the youngest woman in the Senate. The Britt versus Brooks contest was one of several Republican primary runoffs featuring some Trump-backed candidates who have agreed with him about the outcome of the previous election. In Georgia, 2 Trump-endorsed House candidates lost their runoff. California jury on Tuesday found Bill Cosby liable in a lawsuit filed by Judy Huth, who said the embattled actor and comedian sexually molested her at the Playboy Mansion in 1975 when she was 16. Huth, 64 now, said she and her friend Donna Samuelson met Cosby in nearby San Marino while he was filming the movie Let's Do It Again. She and Samuelson testified that Cosby invited them to his tennis club and house, then had them follow him to the Playboy Mansion. There, Huth said Cosby forced her to perform a sex act on him, knowing that she was 15 or 16 years old. Cosby, 84, didn't testify, but has denied any misconduct. His lawyers said Huth created a complete and utter fabrication to get money from Cosby. Now, this incident took place in 1975 when this lady was 16 years old. She's now bringing a lawsuit 50 years later. 50 years later. Again, Cosby. Now we know Cosby's guilty of a lot of things. But this one, I'm kind of suspicious of. But hey, even if it was a complete and utter fabrication to get money from Cosby, it worked because the jury awarded Huth $500,000 in damages. President Biden plans to call for suspending federal gasoline and diesel taxes for 3 months to help Americans deal with high fuel prices. The Wall Street Journal reported today, citing senior administration officials. Biden is expected to make the announcement when he addresses gas prices today at 2 p.m. Eastern. Though he won't have the last word, Congress would have to approve a holiday from the 18.4 cents a gallon federal gasoline tax and the 24.4 cent diesel tax through September, and lawmakers from both parties have expressed opposition. Some Democrats fear oil companies would keep most of the savings, so motorists would actually get little relief. Gas prices, as we know, continue to rise. I think the average around the country is about $6. Last week in California, it went over $10. They're even recalibrating the pumps to add extra digits. Now, part of this, I really believe, has to do with green energy. Green energy is very expensive. It costs a lot of money and a lot of fossil fuel to create green energy. And most of the components for the windmills, for the solar panels, guess where they come from? China. Okay? So, if you can make gasoline as expensive as green energy, well, then maybe green energy doesn't seem like such a bad deal. But why, if we, sometimes the wind doesn't blow. Some parts of the country, like Oregon, where I lived, in Portland, and in Seattle, sunny days are far and few between. If this is the direction the nation is headed, then why are we not building manufacturing plants for all these components, from the solar panels to the chips, all the stuff that's needed to create green energy, which uses a lot of fossil fuel in the process? Let's not forget that. Why aren't we building the factories, training the people, and giving them good jobs, good wages, so that we can not be dependent on China for our very expensive green energy? And our final headline, Cleveland Browns quarterback Deshaun Watson has settled 20 of the 24 sexual misconduct lawsuits filed against him by massage therapists who accused him of inappropriate behavior during therapy sessions. At least they didn't wait 50 years. Watson has denied the allegations and said he wanted to clear his name. Plaintiff's attorney Tony Busby announced the settlements yesterday and said the other cases, including the one filed by the initial plaintiff, Ashley Solis, could go to trial after the current season. That's the football season, I guess. The NFL said the settlements wouldn't affect the football league's possible suspension of Watson under its policy on personal conduct. The NFL commissioner said May 24th that the league had nearly completed its investigation. That was on May 24th. Today's June 22nd. So, I guess they're still working on it. All right. Daily chart of the S&P 500 on the big screen. Our most recent high was put in on March 29th. And then we closed below the BBC, the daily BBC, which stands for Bull Bear Cross. When we're above the green line, we're bullish, we anticipate higher prices. When we're below the green line, we're bearish, and we anticipate lower prices. That's on every market, on every time frame. Okay? And so once we closed on April 11th, below the daily BBC, we've been in a downtrend. We got a leg and a retracement, a leg and a retracement, leg and a retracement. You'll notice that the pullback to the BBC holds more often than it doesn't. That's all markets, all time frames, not just the S&P daily. And we get another leg and a retracement. And then we put in a low that held for a while. In fact, red and falling finally turned to blue and climbing on May 25th. And 3 sessions later, we find ourselves above the daily BBC. And then we spent 7 sessions consolidating right on top of the daily BBC. And we talked about it at length on the show. And you can always go back to previous shows on our YouTube channel, youtube.com/CFRN. Dial in any day, pick a day at random, go back 6 days, 6 weeks, 6 months, couple years, so that you understand that our language, everything I talk to you about every day, the way price flows, none of that's changed, okay? Because it's built on the underlying principles of how markets work. Price flows the same across all markets and all time frames, whether it's futures or stocks or crypto or forex, whether it's a daily, a weekly, a 1 minute, a 30 minute, a tick chart, a range chart. Price flows from support to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a never-ending cycle. And so as we coiled for these 7 sessions, we talked on the show about, boy, we're going to get a big move one way or the other. And because we were above the BBC, we would expect it to break to the upside. But I drew in this little trend line here that kind of gave us a heads up that instead of a breakout, it could become a breakdown. And it did on June 9th. And that closed on June 9th below the daily BBC. After all this coiling and consolidation, took us down to June 16th low at 36.42. And then we dropped a little more the following day. We dropped down to 36.39. And now we put together 1, 2, 3 green days. But important to note, when the session opened last night, and you'll see it as we go to the individual charts, price headed substantially lower. Okay? Now we know that when the step line and red and falling gets directly below price, it can act as support. Okay? So price came down at the halfway point between the step line and red and falling, and then it reversed to put in a high of the session up at 37.97 3/4. So we're well off the low of the day, but we're also well off the high of the day. So how we close today will be very interesting. If we can overcome today's high, then the market has to deal with the high of June 16th, the high of June 15th. Then we hit the 24% reverse fib, which most likely will provide some resistance. And the daily BBC will almost certainly provide some resistance. We could slice through it, but more than likely it will give us a leg to the downside. Now whether we go back to put in a true double bottom here, I mean, we've got a little bit of a double bottom here, but it's 2 days back to back. If we did come back to this area and then start advancing north, I would be more confident in that up move. This move up here, we talked about it yesterday on the show. We said if price can get up into the area where these 2 days, so we got a wick here, the wick of this candle, a high, basically right where we are right now. And you got the top of the body, the top of the body, and then you got these wicks up here, which are potential resistance. Then the 24, daily VBC, 38% reverse fib, 50, 62, and of course we've got this trend line here on the daily chart, and that is potential resistance as well. So buyers have to remain committed, and I'm talking about the institutional buyers. And I always start out each day with the daily chart, and you should too, no matter what market you trade, because hedge fund managers, the Goldman Sachs of the world, they watch daily, weekly, and monthly charts the way you and I watch 30-minute charts and 5-minute charts, tick charts and range charts, because they have very deep pockets. Okay, so it's really important to look at that daily chart before you start your trading session, just to see what the big money's trying to do. Okay, if this green body were to turn red today, then on the smaller time frames we would certainly be looking for short opportunities. We take out today's high or start building here, and you don't need to check the daily chart every 5 minutes. Now look at it before you start trading, get an idea of what's going on, and then focus on what's in front of you. Okay, with the volatility we've had of late, you know, if your goal is a couple points a day, it shouldn't take you too long. You shouldn't have to look back at the daily chart more than once, really. All right, on the S&P, 30-minute chart. This is, see, today's 22nd. So we need to find right there. That was yesterday's closing candle, that little doji. So I'll put a vertical line there. Okay, so that was the Tuesday close. The Wednesday session starts Tuesday night at 6 p.m. Eastern. Just as tonight at 6 p.m. Eastern, it will become the Thursday session. So we had a gap lower open. We consolidated along the BBC for a bit, a couple hours. These are 30-minute candles. And then we dropped. And the short trigger for the S&P was 37.51. Now, once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. We've had a lot of directional movement today. So we'll talk about each one as we go from chart to chart. Okay. So we trigger. Now on every short alert, whether it's logic or CTA, the logic alerts usually have multiple targets. With the CTAs, you've got the published entry, published target. On every long CTA, the final trade to, or logic, the final trade to target on a long is the zone above. On a short, it's the zone below. And so from 37.51, we dropped to 37.21. That's 30 points at $50 a point. That's $1,500 per contract traded. Now the market continued to drop. We consolidated right there at the weekly zone for an hour, and then the drop continued. Now, this bullish cross, we never quite made it all the way to the previous bullish cross. Okay? We always expect a bullish cross that leads to an extended move when price returns to that area, and it did return to the area. We expect it to be good support, and it was. So from 51 to 21, 30 points, $50 a point, $1,500 per contract traded. Now, our more experienced traders who've been with us long enough to truly understand the strategy, the methodology, and how to read the indicators, as price consolidated and then began to drop, there was lots of opportunity here. And then we put in this doji, and that was the turning point. Not all dojis become turning points. Sometimes it's just a continuation signal. But often at turning points, you will find dojis. And there's variations of the doji. If you Google CFRN, the secret life of candles, you'll find the 10 or 12 most popular candlestick signals. There's a couple hundred. Now, this isn't something new that just came down the pike. Japanese rice traders developed this method for trading rice 400 years ago. Okay, so you've got long-legged dojis, dragonflies and butterflies. But all you got to do is Google CFRN, the secret life of candles, and there's a free PDF there that you can download, and watch the chart, and over time, even if you don't remember the name, you'll start to understand the symmetry and how market structure works. Okay, so we hit the turning point after a $1,500 per contract move from the published entry to the published target. We dropped a little further, buyers came in, pushed us up to the BBC. The pullback holds more often than it doesn't. As you can see over here, pullback held, and pullback held, and pullback held. We know eventually it's not going to hold. If it did, then we would have a flat market and it would be virtually untradeable. So we know at some point we're going to get a deeper pullback. Red and fallings, your head's up, and then your bearish cross, and then that took us right down to the target. Okay, then price pulled back to the BBC and the weekly trading zone. When price pulls up to the BBC, we expect resistance. When price pulls up to a weekly trading zone, we expect resistance. So we had resistance times 2. However, red and falling all day had turned into blue and climbing, or red and falling since the session opened last night. Turned into blue and climbing, and that represents support, just like red and falling represents resistance. So price dropped to the BBC, found support. That support got us above the zone, got us above the BBC. In one 30-minute candle, we went from zone to zone, from 37.21 to 37.57. And we consolidated here at the zone. Only 3 things happen at a weekly trading zone. The most common is consolidation. That's what you'll see 70-75% of the time. Like that, like that. Sometimes it'll go on for many hours. Second most likely thing is rejection. That's when the 30-minute candle closes. The only thing left touching the zone is the wick. It's about 20-25% of the time. The third and least likely is the slice. You'll see that about 10% of the time. That's when A 30-minute candle slices through a zone like it's not even there. And when that slice runs out of steam, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. And that's a textbook example right there. So we get above the zone. In fact, this candle sliced through. This was a green candle all the way up. But before the 30-minute candle closed, price had retraced. And so price initially got rejected. We sliced through, but then it turned into rejection. Okay? Then on the next candle, we trigger 37.87, and it takes us up to 37.97 3/4. So that's 10 points, $50 a point, $500 per contract traded. And we got back below the trigger, triggered again, made it up to 37.95. That would be 8 points. At $50 a point, $400 per contract traded. Then we pull back to blue and climbing, where the market found support, and we've now triggered again at 37.87, and so far we made it up to 37.89 1/4. If you're in this trade, look left, because you've got potential resistance here, potential resistance here, and if price can get above that potential resistance, then you've got a nice window of opportunity overhead. Okay? Now, the 30-minute chart is the roadmap. All of the alerts, logic, and CTAs are based off of the 30-minute chart. But you also have to have a trigger chart, okay, a smaller time frame. Some use 5-minute, some use the 4-tick range, like we do in the live training room. I use an 8-tick range as my trigger chart. Some use tick charts, 610 tick, 1597 tick. There is no magic time frame. It just needs to be something that is smaller than the 30-minute, because that's where you're going to time your entry, and that's where you're going to put your stop loss based off that 3-step process that we teach all of our traders. So we had two-sided action. Triggered on the short side, made it to the target. We triggered on the long side twice, and now a third time. But these highs, either this is the high of the day, or buyers will stay committed, and we could potentially see the weekly trading zone overhead at 38.42. If not by the end of the session, possibly tonight. But for that to happen, buyers have to remain committed to buying. It takes financial commitment for price to rise. In order for price to fall, all that has to happen is buyers just simply stop buying, because they've come up against a wall that they recognize they can't overcome at the moment, and so they just back away from the table and wait for a better price. And if you're a buyer, if you're a hedge fund or fund manager that's committed to being long the market, then a better price is a lower price. There are fund managers and hedge funds, institutions, that focus on short selling. And so when they recognize that buyers have hit a brick wall, thrown in the towel. Now, remember what I said about the doji? See, there's a little doji at that turning point. As blue and climbing turned to red and falling. And then down here at this turning point, we also had a doji. Okay. Now, when the institutions that focus on short selling recognize buyers have come up against a brick wall and have temporarily thrown in the towel and just backed away from the table and stopped buying, price naturally starts to drop because it takes financial commitment for markets to rise. At that moment in time, the short sellers come out of the woodwork, and this is what you get. And now, the sell-off that we experienced since the market opened last night, we've recovered. We've overcome that, okay? This current trigger has made it up to 37.91. So that's 4 points. But it's still got to take out this high and this high to get us up into this window of opportunity here. Okay? All right. That's everything on the S&P, so we'll fly through the rest of the charts. On the Dow. Well, I've been meaning to mention to you guys, I posted it over the weekend in the Breeze channel. In Telegram, we have many channels. We have one channel that is open to the public. Not just during the trial, but it's open to anybody. It's where we talk about things other than markets. Now, all my life, I've heard about Jack Kerouac and a book he wrote called On the Road. Now, if you went to college, it might have been required reading at some point. It is considered, I think, an American literary classic. And what I found when I searched, because I heard someone mention it in another podcast, so I Googled, and I found a YouTube channel that has the entire audio book, and the guy that does the reading, man, is he good. I'm trying to decide, do I want to find another book by Jack Kerouac to read, or do I want to find another book that this guy read? So the voice you hear, if you do the search, Jack Kerouac, On the Road, YouTube, it'll take you right to the channel. But man, the book itself, so I'm told because I haven't read it, it is engrossing. It's the type of book where you start to read it and time just goes by, and all of a sudden you look up and you can't imagine or believe how much time has passed. I had the same experience with the audiobook, and I know that part of it had to do with the masterful way this gentleman narrated the book. So if you're looking for something to put on your things to do list, and maybe even if you read it back in college, it's probably been a few years, you might enjoy listening to it. If you listen to it, the way the Google algorithm, the YouTube algorithm works, is it then brings up a video by Allen Ginsberg, who you may or may not know, but he goes into some of the details of Jack Kerouac's life. And so when the book's over, because it was one of those kind of, have you ever had a book that you're reading and you start to notice you're getting towards the end of the book and maybe you slow down your reading because it's such a wonderful experience. You don't want it to end, right? And on my phone, on YouTube, I was watching that little slider. Maybe I got another hour. Maybe I got another 30 minutes. And then, of course, it ends. But the YouTube algorithm rolled me over to then, and it automatically started playing Allen Ginsberg talking about his friend, Jack Kerouac, and his life. So, not going to say anything that will spoil the experience. So whether you've read it or not, I recommend it. Okay. All right. And of course, there's adult language and whatnot, but it's nothing nasty. It's just life. On the Road with Jack Kerouac. Okay. So the markets opened last night. We come down to, we're on the Dow now. We consolidated at the weekly trading zone. Then we made our first initial drop. And it really didn't take us very far. 415 was the trigger. And it took us down to $97. So about almost $100 per contract. And then it did the same thing again. And it got back above the trigger. And on this trigger, it took us all the way down to the target. Now it went beyond the target. Okay. Remember how the ES looked? How we had the bullish cross? Okay. Price didn't quite make it all the way down to the bullish cross. What it did do was it ran right into this swing low. See this long wick that came back to touch the BBC? You always got to be looking left. It will change your trading dramatically if you'll learn to do that, if you'll make that a part of your process on the 30-minute chart, okay? Now, from 3415 to 3200, that would be 215 points. So we'll just call it 200 points at $5 a point. That's $1,000 per contract traded from the published entry to the published target. Again, just like the ES, we went considerably further. But $1,000 per contract is what the market offered from the published entry to the published target. Now, on the long side, the market's really struggling at the CTA. Price often behaves around the CTA in the same manner as a weekly trading zone. As you can see, we got rejected here, and we got rejected here. And we barely managed to climb above it here, but not with much conviction. From 670 to 682, 12 points, $5 a point. Okay, that's what the market made available. When I look at that, I just see it as a rejection. This is why you have your smaller time frame, your trigger chart, okay? Because the smaller time frame has to give you the green light to actually take the trade. Because when the market makes a turn, are you going to see the turn first on a 1-minute chart or an hourly chart? Obviously, you're going to see it on a 1-minute chart first. But I'm not telling you you should use a 1-minute chart, because the smaller the time frame, the more false starts you will get. Okay? But this is why it's important that you have your 30-minute roadmap and then your smaller time frame trigger chart. And even when they both are giving you the green light, 20% of the time you're going to get stopped out. That's the truth about trading. Okay? So Price is now pulling back. It's already gotten below blue and climbing. It could potentially find support at the step line like the previous candle did, or it could continue to drop all the way back to the zone. It could continue to drop all the way back to the BBC. Okay. Nobody, not nowhere, not no way, can tell you with complete accuracy what's going to happen next in the markets. It's impossible. It defies the laws of physics and science, and I've explained it so many times on the show, I don't need to explain it again, I don't think. It's just not possible. Because any major trader, anywhere in the world, can pull their order or put an order in. And that side of a large sized order will shift the order flow. And so there's no way no man, machine, or algorithm or anything else can predict the future. Adam, he was never given the ability to change the past or to know the future. And those two things are inextricably linked for eternity. Now, our strategy and our indicators take that into consideration. So while we freely admit we don't know what's going to happen next, we do know with a great degree of probability what the next high probability move is. And as you become a passport holder and you learn to read the charts and you learn to understand how price flows, read the indicators, utilize the zones, you too will be able to look at a 30-minute chart and know what the next high probability is. And 20% of the time, it won't work out. Okay? Alright, let's pick up the pace. Here's the Russell. This is where the market opened. Below the BBC. So we're expecting a move to the downside. $16.90 down to $16.85, 5 points, $50 a point, $250 per contract traded. And then it dropped to the next zone, and as you can see, it caught a little bounce there, consolidated a little bit, and it continued to drop. And if you look at the horizontal line on my cursor, that low lines up pretty well with these lows right here. What was previous support, the next time price revisits that area, we expect it to be support until proven otherwise. Just like this resistance, price makes it up there, we expect that to be resistance until proven otherwise. Okay? So we only had the one short trigger. It took us from the published entry to the published target. And then we had a long trigger at 1700, and that took us up to the published target at 1704. So that's 4 points, $50 a point, $200 per contract traded. Then price pulled back to the weekly trading zone, which we expect to be support. When price moves up to a zone, we expect resistance. That's what we got. When price drops to a weekly trading zone, we expect support. That's what we got. And we could be on the verge of triggering again. On to the NQ. Okay, two-sided action on the NQ. Here's where the market opened last night. Came down, triggered 11,545. And took us down to 527, 545 minus 527, 18 points, $20 a point, $360 per contract traded. And then price See 44.5? It didn't quite officially get back above the trigger, so we don't count that as a second trigger. Okay. Now price continued to fall. We continued to have red and falling, and so our experienced traders, guys have been with us for a while, and ladies who've been with us for a while, would have no trouble. When the 30 minutes falling like this, they've got their smaller time frame trigger chart out and taking advantage of these opportunities. When price got to this area here, see how it went sideways a little bit? Look here, right here. See? And then this low here, here, okay? And price continued to drop. And there is another doji at the turning point. And that's these lows here and here. It's an area. So price moves up to the BBC, which we expect to be resistance, so proven otherwise, and it was. But just like on the other indices, red and falling, it turned to blue and climbing, which we expect to be support, and it was. Got us above the BBC, got us above the weekly trading zone, and then from 11,605, which was the long trigger, took us up to 619. That's 14 points at $20 a point, $280 per contract traded. Then price got back below the trigger. We had a red candle for a little bit. Buyers came in, turned it into a green candle. We got a trigger that took us all the way up to the published target. So 722 minus 605. Let's make it simple and just call it 100 points at $20 a point, $2,000 per contract traded. And then price got back below the trigger, triggered again, and this time it took us up to 11,680. So that's about 75 points, $20 a point, $1,500 per contract traded. Now, this bullish cross here, okay, price starts to drop. Expect that area to be potential support. Okay. Now, there will be times, like we had a bearish cross here that led to an extended move. On the 30-minute candle, it looks like it sliced right through it. But I bet if you go look at a smaller time frame, right around the area of this bullish cross, you'll see some pushing and pulling and some back and forth. Okay? Check that out for yourself. It's important that you get involved in the process. Okay? Don't think you got to learn all this just by osmosis. It's a simple strategy with simple indicators. But you have to become actively involved in the process. And it is a process. Welcome to the process. Now, blue and climbing has gotten directly above price. So if price continues to move higher, in fact, on this candle, see how blue and climbing became resistance because it was directly above price? So you've got a small window of opportunity here, or maybe 677 to 697. That's 20 points, $20 a point. That's a potential $400 per contract move there. Okay, but you got to time it with your trigger chart, whatever trigger chart you've chosen. All right, that's all of the indices. Crude oil. No trigger on the long side. We triggered once on the short side, and we went all the way to the target. From 108.80 to 104.80. That's a $4 move if you're trading one contract. That's a $4,000 per contract move. When the price of crude moves $1, that's worth $1,000 per contract traded. So a $4 move is $4,000 per contract traded. You notice we had red and falling all the way down. Okay. Now price pulled back up to the zone and found resistance. It then dropped to red and falling, but because red and falling was directly below price, it provided support. It sent us back up to the zone, which gave us resistance. We got through blue and climbing. We pulled up and we dropped. And if we scroll back far enough, and I'm not going to do it now, but you'll find a reason why price ground to a halt right there. Okay? That's your homework assignment. So now, after a $4,000 move plus all this, that's not included in the $4,000. But our traders who understand the methodology and the strategy would know how to handle this. And if you become a passport holder, you'll learn how to handle it as well. Price has gotten above the zone, it's gotten above the BVC, we've got blue and climbing, so what do we anticipate? Higher prices. Get above the high of that candle right there. And get out below the high of that candle. Now that's a very conservative window of opportunity. But from 107.10 to 107.80, that's $700 per contract traded. Well, why not just get long now? Well, this 30-minute candle couldn't break free. This 30-minute candle couldn't break free. Will this be the one? Will it be the next one? I don't have crystal balls. All I can do is watch the chart and exercise patience and self-discipline, which are two things you need to become a trader, and they're the two things we can help you with, but we can't provide them. We can teach you the strategy, we can teach you how to read the indicators, how to read the chart, how to read price. We can help you with patience and self-discipline, but ultimately that's something that's got to come from deep down inside of you. Okay? Now, am I saying price is going to grind to a halt here? Nope. I'm just saying that's a very conservative $700 per contract opportunity. Price could certainly continue. It fell. No reason it can't climb, right? What goes up will eventually come down, and what goes down will eventually come back up. We're basing it all off that candle right there. Okay? All right. If we take out the high of that candle, then the next area for resistance would be right here. Okay, up around 108.25. And then the long trigger, which never triggered, is up at 110.20. Gold. Two-sided action. Here's where we opened, we dropped. And the trigger was 18.27. We dropped about 40 bucks. We got back above the trigger, dropped again. We dropped down to about $100 per contract traded. We got back above the trigger, dropped again, $100 per contract traded, back above the trigger, dropped again. This time, $170 per contract traded. Back above the trigger, see how the pull up to the BBC, even though we spiked it all the way up to the zone, pull back held. And that gave us a move down to 1824.5. So it's $250 per contract traded. And then price, notice red and falling, became blue and climbing. We got above the BBC. We got above the zone. We took out this high. We triggered 1841, which took us up to 1844.60, so that's $360 per contract traded. And we got below the trigger, put in a high at 1842.80. It's $180 per contract traded. And we got back below the trigger, triggered again, ran all the way to the target. Okay, on this one here, we ran all the way to the target from 1841 to 1846. That's $500 per contract traded. And back below the trigger, another $500 per contract traded. And then we had a little move here, $90 per contract traded. And the current candle has moved up $140 per contract traded. Check out red and falling right overhead. That spells potential resistance. Not that price can't trade through it, it certainly can, but you should be very cautious as price, if you're long, as price reaches up to red and falling, be very careful. Okay? Tighten your stop, take your profit, whatever the case. You know, once price gets on the other side of red and falling, you can always re-enter it if you want. Okay, silver. No trigger on the long side, trigger on the short side. Now this was the opening candle and the alerts had not come out yet. And so our first trigger, 21.53, 2 pennies is $100. And that's exactly 2 pennies. Then we get above the trigger, drop again to, that's $150 per contract traded. Then back above the trigger, and this time we drop to 21.47. $300 per contract traded. And then we got back above the trigger right there, and we went all the way to the target at 21.44. That's $450 per contract trade. Then price continued on down to the next weekly trading zone. This was the published entry, and this the published target. And when these things happen, once you exceed the target, okay, you'll learn to make decisions whether to stay in the trade based on what your indicators look like, or you'll learn to re-enter the trade. Price gets above the BBC, gets back above the short trigger, and price drops to the target, and we get back above the trigger, and we drop to the target again. So a number of good opportunities for silver on the short side. Okay. 2 more markets, the euro and bonds. Okay, here's where the market opened, below the BBC. Dropped to the zone. Got 1 trigger, took us all the way to the target. Now, when price goes from 800 to 700, that's $125 per contract traded. This went from 840 to 665, so that's well over $200 per contract traded. Okay. And we got back above the trigger, but you don't want to take this short because you got blue and climbing, you know, potential support. And you're above the BVC, and we don't go short above the BVC on the 30-minute chart. When price is above the 30-minute BVC, we're only looking for long trades. So price continues to climb. We get up to 235, which takes us up to 365. That's over $200 per contract traded. We get back below the trigger, and we almost made it to the target. The high was 730. So 730 minus 235 . It's about $618 per contract traded. And we never quite made it all the way to the target. Triggers on the short side, triggers on the long side. Two-sided action. Okay, final chart. Bonds. No trigger on the short side. The long trigger was 134. So we had an initial trigger that took us up to about 134.10. And then we just barely got back below the trigger, triggered again, and from 134, took us all the way up to 136.10. So a very, very nice move for our bond traders. Okie doke. Pull that back down. Get that out of the way. Last look at the daily chart. Still got that green body. Just keep in mind that these two swing highs right here, these two wicks, are potential resistance before we get to the 24% reverse fib and the daily BBC. Now, you've already taken your free trial and you're ready to get your passport. Go to eminifuturestrading.com. It's right there. This is your all-access lifetime pass to everything we do, everything we've ever done, and whatever we might do in the future. Once you've got your passport, you'll never pay us another dime. It's good for life. Okay? Now, that gives you access to the live training room every day where you have a live instructor putting on, taking off trades, explaining every move they make, every trade they take. 9 out of 10 traders fail simply not because they're stupid or can't get it or aren't cut out for it. They just don't have anybody to teach them. That's why we make sure you have a teacher each and every day. Along with having access every day to the live training room, you have access to unlimited one-on-one private mentoring. All you got to do is book a session. Myself, Michael, Valerie, Bert, whoever you want to meet with. The methodology, the strategy that we teach you, the indicators we provide you, work across all markets and all time frames. Futures, stocks, Forex, crypto. Because remember, price flows the same across all markets and all time frames. You also receive the Logic 247 alerts around the clock. You receive the CTA report every evening. You get an invitation every Thursday night to the members only workshop. All that and much more. It's everything a trader needs, all under one roof, at one low price. And if that weren't enough, you also get around-the-clock support via our Telegram discussion channels. We've got a lot of channels and discussion groups in Telegram. We got a channel for everything. We even have one for talking about stuff that's not even trading related. The Breeze channel. Okay, so we go to shoot the breeze about stuff other than the markets, like On the Road with Jack Kerouac. Okay, and then there's a weekly trading zone channel. There's a CTA channel and a Logic channel. There's a members only discussion group. There's a trial discussion group. We got you covered. If you're sick and tired of being sick and tired of falling for all the empty promises, buying every new shiny indicator that comes down the pike, thinking that's going to be the one, because that ad copy is so compelling, that video is so compelling, this is it, this is the one, I don't ever have to know the agony of being stopped out again. Just fooling yourself. How much time and treasure have you spent? How much time and treasure are you willing to spend looking for a holy grail that doesn't exist? Can't exist for reasons of science and physics and God, and I already explained that. Okay? So, if you actually want to learn how to trade, if you're not looking for a parlor trick or a circus act, but you want to learn how to trade, go to eminifuturestrading.com. That page is pretty simple to understand, but if you need help, call Valerie at 949-42-EMINI, or just send an email to support@cfrn.net. With that, we'll wrap this up with our good word for the day. Stand by while I find my notes. Oh, you know what? I just thought of something. Before the holiday, we started a discussion. It wasn't really a cheerful discussion. It's called When You Die, What Happens? Okay, we already did part 1. We should complete that, because it's all something we're going to have to deal with at some point in life. And only the Father knows when that time is. 2 Corinthians 5:1. When we die and leave this earthly body, we will have a house in heaven. When you die, you simply leave one form of life and enter another. One is temporary, the other eternal. Consider the first law of thermodynamics. Neither energy, as in your soul or spirit, nor matter, as in your body, can be destroyed. They can be transformed into other forms, but they can't be annihilated. If you go dig up a grave from 2,000 years ago, there'll still be remains there. There's only one place where you won't find anything, and that was Jesus' tomb. Burris Jenkins said it this way: no single atom in creation can go out of existence, according to the scientists. It only changes in form. We cannot burn up anything. We simply change it from a solid to a gaseous state, and then we're left with ashes. Neither is any energy or force ever destroyed. It is only changed from one form to another. If a person actually ceased to exist, they would be the one thing in the world that does. So when you die, what happens? The Bible says in 2 Corinthians 5:1-5, we know that when this tent we live in, our body here on earth, is torn down, God will have a house in heaven for us to live in, which will last forever, eternity. And now we sigh. So great is our desire that our home, which comes from heaven, should be put on over us by being clothed with it. It is not that we want to get rid of our earthly body, but that we want to have the heavenly one put on over us, so that what is mortal will be transformed by life. God gave us His Spirit, the Holy Spirit, as the guarantee of all that He has in store for us. Think of it like this: your last day on earth will be your best day ever. How awesome is that? And that's a good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this: there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.